What's up, traders? I wanted to follow up yesterday on my video where I talked about simplifying Ichimoku into 50% retracement levels. I had a very good question that came across my social media. I like this guy's icon and name. Thanks for another video. Question about your take on 50% level. If you see a drop past the 50% retracement, do you cut right away or let it play out a bit more before making a new consideration? This is a very good question because we can analyze a chart all day long, but the goal of trading and investing is to make money. And one of the first rules of making money is don't lose money. If you want to know what rule number 2 is, it basically says refer back to rule number 1. And that means controlling your risk. So it's a very good question because we can take trades all day on 50% levels, but there's no guarantee that that's going to work every single time. It's just a very good guideline to go on. So I wanted to use Apple to illustrate how to actually structure trades around the 50% level, because this is going to be the key for using this to make money. I like Apple because it has a long, rich history. I am curve fitting a little bit, but you'll see how great it's actually worked over the long history of Apple to look for these levels. So let's use our little time machine to go back. I've highlighted a couple of major highs with the rocket ship. So let's see what happened. So we had this big run starting in 2009 all the way up to about 2012. And so if we were a long-term investor in Apple, I remember a lot of people talking about this. Everybody's talked about Apple for decades, but a lot of people were in on this run. It was the stock to be in. But if you felt like you were getting in late up here after it had gone up, say 500, 600, 700%, then you were probably right. But if you were patient, you would have been able to see where it would have gotten back to the 50%. Now, once it hits this 50% level, you need to structure a trade around it. Even if you're a long-term investor, it's very helpful to think like a trader because they're one and the same. The way you can do this is you set your entry at that 50%. We can all agree upon that. Now, let's size our position and our trade based on what we're trying to do. What we're trying to do, of course, is first and foremost, get it up there, get it back up to the high. So if we set our target up at the high, we can now begin to structure a good risk reward around it. And so you can use a 2-to-1 or a 3-to-1. Just make sure it's bigger. Your reward is bigger than your loss or potential loss. If you set that to 3-to-1, which I like, we can see how this plays out. So it may bounce around a few times. And this is actually important to look at because a lot of people on these long-term levels are probably going to be tempted to take weekly options or some BS like that. No, if we're looking at a weekly chart, we need to give it some time. And really and truly, I'm trying to go on a mission to get people to buy shares. Give your future self, and what I mean by that is your self 10 years from now, the gift of wealth. And that doesn't mean trying to make a quick buck over the next month. That means buying shares in good companies, Apple being one of them, on major pullbacks like this so that a few years from now, you'll be able to capitalize on those rewards. And so from there on, you're in Apple, you got it at a good price, and it starts to top out once again and pull back. So let's redraw our 50%. This is now in the year 2015. We'll take it from the swing low here to the high, and there we have, once again, nice ping of that level. Actually looks like we might have missed that, but who cares? We're going to put our entry order out there. We're going to be patient. We're not going to chase this trade. Again, look for it to get back up to the high. Give it a 3-to-1 and see what happens. So at this point, did we miss the move? Well, our order's still sitting out there. Yeah, of course. I knew what was going to happen because I looked through this beforehand. But the premise of it pulling back to the 50%, holding the level is fine. It actually gave you more than one opportunity. This is why you don't chase. This is why you don't chase. I mean, it took several months to get back down there. But at the end of the long term period, we're going to get back up to that high. I mean, we all know where Apple is right now. So we know from 2016 and onward, yeah, we're going to make money. So if we miss this opportunity, I bet we're going to get another one here in the future. Where's our next little? Let's see. May have to start from the beginning. 1 second. So let's look at this next 50%. From the swing low to the high, we're going to go ahead and put our order out there. Back up to the high. Where's our 3-to-1? Yep. Almost good. Patient, patient, boom. Now, this can get a little scary, but that's why we want to set our risk with enough of a buffer so that we don't just automatically get stopped. This goes back to Barnes' question. What happens if it does get below there? Well, we have to use good risk management, but we also need to make sure that we give it a wide stop. But we didn't need to give it a too wide of a stop because we were still able to get our 3-to-1 just off this level. Now here we are in 2020, and we all know what happened last year. So let's take it again from the low to here and see what would have happened. I mean, we already know what happened, but let's just see how it played out with our proper risk reward. Oof. It actually spiked down, didn't quite get to our stop. If you were queuing off this last high, a lot of people probably got shaken out. A lot of people got stopped out on that. But our proper risk reward held. So as we get more and more closer to the present here, the question is, if this is the high, which it is the all-time high of Apple, where then would we be looking for a pullback on Apple? Well, let's draw it. Our pullback level for a long-term play would be at 99.40. I like it's got that little inflection right there as well. And so that's Apple. And as if you've been paying attention to the markets this week, tech is rolling over. The money is shifting. A little thing called sector rotation is happening, possibly out of tech and into other things. And I'm going to make a video on that shortly. Another thing to look at is Tesla. I'm talking about this where I would be a buyer of Tesla if we can get back to the 480 level. Right about there. A nice retracement would get us in very good. Also like it that it's got a bit of price action right here to back it up. So about the 480 level would be a really nice pullback on Tesla. So I wanted to talk about one of my losers from a while back, because it's one thing to talk about all your winners and dazzle everyone with how smart you are, but the way you get there is by studying your losers. A few years ago, I took, according to this strategy, a 50% level on Chipotle, CMG. And you can see it right here. It was in 2016. So I bought here shares, and this was a long-term hold for me. Well, it broke down below the 50% level. And if I had used proper risk management on this, oh, we need long. Back up to the high with a stop at 3, then yeah, I would have gotten stopped out right about here. And that's fine, because what ended up happening was I actually capitulated sometime in 2017. That sucks. But this is what happens if you hold on to losers too long. You get to that point of maximum pain. And ironically, as if you've traded long enough, you've seen it, that is the point where you just capitulate. You get out. It's what happens when you get outside the realm of having some rules and some structure around your trades. And so I gave up probably way more than I needed to. Here's another interesting thing about the 50% level. Let's say that it had triggered my stop alert. If you notice here, there were actually multiple instances where it came back to retest this level in the future. This can be a very powerful level. So even if you do end up getting stopped, or if it triggers your stop alert, if that's what you're doing, you can have oftentimes an opportunity to get out and break even off queuing off those levels. So that's the ultimate answer to Barnes' question. What do you do if it breaks the 50%? Well, you can be disciplined and just get out with a stop order. You're probably still going to be better off. It's a good habit to have. Or you can wait until you possibly get a retest of the level, and that will give you a better exit. But you need to have a plan for when that happens. If you do that, if you manage your losses, your winners will take care of themselves, because this is a very powerful level. It happens often enough that you're going to make money off of it if you don't let your losers hurt you too much. So with that, trade wisely, and we'll see you in the next video.